Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the CEO, Aydin Kilic, and the executive chairman and co-founder, Frank Holmes of HIVE Digital, to talk about this morning's big press release in relation to this new 100 megawatt data center being constructed in Paraguay. Now, we've got a number of questions for the team at HIVE. It's been a while since the guys have been on the channel, a lot to go through, but before we get into it, please take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. We just hit our 45,000 subscriber goal before heading down to Nashville. We'd love to try and get as close as we can to 46,000 this week as well. And in addition to that, leave a comment in the section below. Let us know if you're currently holding shares of HIVE, what you thought about today's big press release, and your outlook for the back half of the year. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got Aydin Kilic, the CEO of HIVE Digital, and the co-founder and executive chairman, Frank Holmes, in the studio to help talk us through the massive press release that came out this morning. HIVE seeing a ton of investor attention, both in terms of volume and share price, and we're really excited to walk through this announcement in more detail. So guys, thanks so much for being here. Really looking forward to the next hour.
Thanks for having us.
You're most welcome. Now, first things first, can you give us a quick high-level walkthrough of what came out today in terms of the press release, the details around this news, and what this really means for HIVE moving forward?
I think that it reinforces HIVE's commitment to sustainable growth using green energy and ethical Bitcoin mining practices, and their best practices. So I think that that's really important. When you just look at financials, hey, it's going to take us from 5.5 exahash to 12. That's significant over the next 12 months and gives a big growth profile. I know that, I can share with you, it's been really difficult to be able to get size of green energy. It's very hard. Canada's pretty well shut down. There's pockets opening up in Nordic countries, but this is a wonderful part. And the other thing is significant. Paraguay is the president is about a pro-business, and he has a great vision for the country. And for us, what's important is that it's hydroelectricity, but we have the ability to work with all the local people, and that's very, very exciting for us to be able to grow our footprint of 100 megawatts. And the potential for us in what we've been able to do could be 250 megawatts.
Yeah, and I think just building on one of the points that Frank made is the commitment to green energy. It would have been a heck of a lot easier for us to get some grid mix in any jurisdiction, but we've scoured all the jurisdictions that we operate in. I mean, we have deep roots in Canada, deep roots in Sweden, obviously deep roots in Iceland as well. And so as crypto mining evolves and gets more industrialized, now it's more sophisticated. There's lobby groups, but there's very limited renewable energy resources. So we hope that the investing public, the people, the shareholders, the enthusiasts, the Bitcoiners who believe in sustainable Bitcoin, green energy mined Bitcoin, virgin coins, see this as a testament to our commitment and realize that when we're always working. It's just like, if I got a prize for every time we looked at a site and turned one down, but we're very happy to make this huge news to the public. I think the best is yet to come.
Yeah, it really is an incredible step in the right direction. And I know we've had a lot of people really messaging us wanting to get an update on HIVE since the earnings came out. So this is a great news piece. Now, we've talked and heard a lot in this industry about the value of infrastructure, how rare these sites are, access to power, PPAs. There's just not a lot of 100, 200, 1 gigawatt sites available. I can only imagine when you layer in the renewable component of that, the level of rarity goes up another notch, and these become even more valuable within your portfolio. Is that correct?
Yeah.
And like Bitcoin algorithm and 21 million coins is special. So is being able to get green energy and source it.
The other thing too is having attractive pricing, right? So we haven't provided too many specifics, but this puts us in a very, very competitive price, and in fact will lower our global average operating electrical price. So we're very excited about that as well. So it gives us scale, green energy, and incredibly attractive economics. And by the way, it's not just about making money, but we always invest in the communities that we do business in. We've done a lot of work in Sweden that we've talked about. So we're really excited about flourishing in the Paraguay business community.
Yeah, we've had Ben on the channel a number of times. He's really spoken highly about Paraguay, the political, economic sentiment in that country. Now, the next question I have for you, this is a 100 megawatt data center facility. Is this going to be focused exclusively on self-mining at this point in time?
Absolutely. This is our puppy. We're going to lock and load and put a lot of machines in there. And so it's exciting, a growth opportunity for us. Like Aydin said, energy pricing is very important, because even a half a penny basically makes a lot of machines no longer relevant unless Bitcoin goes to $100,000 and the difficulty doesn't rise. So it's sourcing also the pricing mechanism for these countries. But what is it good for Paraguay? Not only is it good for employment, we are a currency hedge, because Paraguay has sold electricity to, it's landlocked and has sold electricity to surrounding countries that don't pay, or they don't pay on time. Milei from Argentina just paid 10 days ago $100 million. They've been owed almost $200 million for several years. So with us, you get paid every month. You get paid US dollars. Their banks couldn't set up an infrastructure where it's going to give them $100 million on $100 million capital for us that they're going to make on their energy bill. So it creates the stability for the president of the country running his fiscal budgets, etc. So we're happy for many reasons of sort of the balancing act between the needs of a country, the needs of a community, and the needs of HIVE shareholders.
Yeah, obviously the cost to build this site out and fit it with the latest machines, you probably got your eyes already on those as well. Once you get the approval comes through. I mean, you articulated, I think, an update last week with a fresh 200 million at the market offering. Is that going to be sufficient funding to get this project to its fruition?
Yeah,
Absolutely.
yeah.
The thing is, Anthony, we've talked about attractive electrical price, but the other thing is the capex is very competitive on a dollar per megawatt basis. So staying true to our best cash flow return on invested capital model, this site ticks all the boxes for us, right? And so we really wanted to scale with intention and not just kind of, we've looked at a lot of sites where, we see some people overpay on a dollar per megawatt basis, and you can just print some shares and run after that and overspend, but we didn't want to do that. And so we think that this is going to really allow us to have a world-class facility at the same time delivering great value for the shareholders.
Yeah. I mean, the project you've already articulated is going to take 12 months to get all the hash rate up and running, but obviously, in your previous growth strategy, which I think you announced December last year for 2024, the target for the end of this year was to get to 8. Do you envisage some of that hash rate coming online by the end of this year to make up that shortfall from, I think, just over 5.5 exahash?
It's possible. At that time, we were looking at numerous other sites that we could have parlayed to get to the 8. But again, really wanting to just get the best growth opportunity and close on that. When we found this opportunity, it was just like our focus completely shifted. So, we might bring some more hash rate online in the meantime, but our commitment right now is to secure this development ASAP, and it'll likely come on in phases. So we might get to that 8 for the year end, but we'll see.
Anthony, I'd like to add,
Yeah.
we had the lowest G&A to mine a Bitcoin. We have the lowest shareholder dilution. Still made money in every quarter, even when Celsius and FTX blew up. We're a conservatively run company. We don't go and borrow at 14% interest against our machines. We don't do those things. We move methodically and conservatively of how we position for the company. Some people, they don't care, just issue shares and buy a bunch of assets out there in the marketplace. We're just more conservative in our approach. So will we get up to the exahash that you're talking about internally? It's really interesting because if we accelerate what we're spending now, $2 million a month upgrading our machines to $5 million a month, what does that do to our hash rate?
Yeah, so we had a very strategic plan to get our global efficiency down to 24.5 joules a terahash, leading into the halving, which we're now going to realize within the next few weeks. The next step would be to upgrade machines that are sort of at the 30 joule per terahash range. And so that would, if we upgrade them with pros, S21 pros, I mean, right? And those are 230 terahash per miner. And I'm going to give you an example. So say there's 8,000 machines left, and those are 100 terahash, and you've got 230 terahash machines. That delta is 130. I think that'd be another exahash if we change them all to pros.
Yeah.
But then it would also bring our global fleet efficiency down even further, right?
Without increasing the space. So you just basically
precisely just within our
getting more from the same space. Yeah, that's good. And actually, to be honest with you, that was a question I was going to ask you. So you guys have been highlighting with regularity about replacing your fleet, and that's something that every miner has to consider. But we don't seem to get as many updates from peer miners. But you guys have been sort of like, replacing your fleet all through this year. All the updates we've had, it's about replacing the less efficient miners, getting ready for that halving and impose the halving now. So,
and I just want to add to that one very important point. We don't replace miners because it's trendy or we want to grab a headline. We mine for as long as possible to get as much cash flow return on invested capital out of those machines, and then once those margins have thinned out and there's accretive opportunities in the market, boom, we acquire, right? So the 500 that we announced, they're already ready to ship, right? That's 21 pros that we announced, right? So we're always about, like, think of this, Frank's the money manager. The capital always has to be performing, right? We don't want it sitting, doing nothing at the coffers of a manufacturer waiting 9 months. So that's just how it's worked. And I do think, it'd be interesting for you, Anthony, but you're very astute with your numbers to try to track that. Who is real? Like if you look at the press releases and try to follow, it'd be really interesting to see how some of the miners perform, right?
Absolutely.
I looked at some of the other ones that are out there, and they have twice the amount of energy that we have, twice, and they produce less Bitcoin. So you start sitting back and you find out, the carbon tax in Canada is all of a sudden impacting their costs to go up. They didn't expect that from 2 years ago, and so we go just conservatively and methodically, but we're conservative. We're not binge buyers. We're not going to go, we're going to buy $5 billion of the machines and issue 3 billion shares and do all that. That's not us. It's not our style. We're boring.
Boring makes money, though.
It does.
Not as boring in the metrics, though, are you? Do quite well in the metrics. I think you're sort of a slim hair away now from the year-to-date top spot. You caught Bitfarms up in June and narrowed that gap there. So it's interesting. And to be honest with you, this year it's actually a lot closer with all the miners. So everyone's really focusing. Whether it's been because we've had probably a milder summer than expected, maybe not as many curtailments, but it looks like the gap between, say, the top 7 and 8 is actually a lot closer than it was in previous years. You and Bitfarms used to run away with
Anthony, that's a good point. And what I'll say to that is, and this might be a bit brash, but I would say that by taking the high road, we've tried to create this environment where we're holding miners more accountable by leading by example, right? Making them more honest because, exactly a year ago, people were just talking about how many machines they had. Were they plugged in? Were they on the floor? Were they energized? Were they not? Who knows? But this is what our hash rate is, right? Well, how much Bitcoin are you mining, right? So you and me were, I think, the earliest guys in the industry to really look at the Bitcoin per exahash metric, and that really kept everybody honest. And so I think that makes the industry more transparent because there's a lot of ways, when you have all your spreadsheets, you could just sort of cherry pick statistics. But at the end of the day, how much Bitcoin are you actually mining? You're in the mining business, and everything else is window dressing, right? So, we really try to really ensure that we want to just investors want exposure to Bitcoin as an asset class, right? They want to invest in a miner. You want value, right? You don't want all the hoopla, and that's why we have the lowest G&A as well,
You want
right?
consistency. You want consistency as well as
Yeah.
value. So it's no use mining 1,500 Bitcoin one month and then the following month mining 800. It doesn't really get the 1 month is great, but you want that consistency and you and Bitfarms have probably been, from a production point of view, of last three years, the most consistent in every monthly update. It was like a Canadian top four for this month.
And we have to function, which you're relating to, because it's so late for you right now in London. We function in 9 time zones. Our peers are all in the state of Texas, or they're all in this. So now we're just diversified within the states, and everything is a 2-hour flight for people. We are all over the world. And now Paraguay is even more challenging to fly to. We needed to have size to justify going there. But I think that what we are is that, besides green, is that we're trying to run, I'm a money manager, a diversified portfolio, a suite of machines that are always being upgraded. And Aydin does this marvelous job of this, always monitoring. Machines go to this jurisdiction, machines go to this data center. Where are we doing plugged in? Every day we track and we know every morning what our global efficiency was and our cash flow. And it's a hands-on approach that everyone calls in to try to be able to, what's the expression, is to be aware of the importance of cash flow.
We're talking about those machines. So you've been replacing machines this year. We've seen that through your updates. Do you have capacity, if the hash price increases sufficiently, that those less efficient miners are now becoming profitable? Do you have the capacity to actually reuse them and put them back onto the network?
Yeah, I think, Aydin, we have a variable source of energy in New Brunswick, which all of a sudden machines are not as efficient. You can immediately plug them in and capture that 30 megawatts.
I like to just kind of remind people what kind of happens on a day-to-day basis that is doesn't always get discussed. But our CTO Bill Gray has really developed an incredibly unique software that tracks the live power prices, which are variable. And because we have, every crypto miner now has been in business for 3, 4, 5, 6, 5, 7 years. And so when you're upgrading these machines, as Frank says, you have a spectrum of machines at different efficiencies. So they have different break evens. They also have different operating characteristics. So taking that all into account, it's all driven by software where we know the break even of every different type of machine. And so we might shut off just this type of machine just for half a day if there's any price volatility. And that's so important to do because we always want to have the best unit economics, right? Like that's how we've run the business. That's how we mine profitably through the last 3 years. Like in our earnings webcast, you see that bar chart with the revenue and gross mining margin. Frank alluded to it, but it's such a powerful statistic. FTX bankruptcy, Celsius bankruptcy, Core bankruptcy, Argo bankruptcy, all 2022 was brutal. We made money quarter over quarter, right? And how do we do that? We religiously study hash price. We're always on top of every single machine. And it doesn't matter if it's 20 machines or 300 machines. everything gets attention, right? Like the second that you get lazy and complacent about it, those are bad habits, right? The beauty is that it's so quantitative for guys like me. I thoroughly enjoy it. Like it's like a symphony. So we're always just, conducting the machines.
Talking of conducting the machines, I mean, do you do lots of testing at certain levels of power for each machine to work out optimization?
Yeah, yeah.
So
I mean,
you can like
we were one
underclock
of
the
the
machine,
we were
knowing
one
that
of
you'll
the
get a better
innovators in
return
that.
by doing it at the normal level. Is that you know?
Yeah, I mean, like we were one of the innovators in that early on, and we really advocated for underclocking, or in some cases even overclocking, because all you're doing is you're varying the machine efficiency through code, through firmware. You're changing the thermodynamics, and so that's absolutely something that we do big time. Yeah, and we did the buzz miner. It allowed us to have a really inside look under the hood of what the trade-offs are when you do that sort of stuff, right? Because I think early on people would talk about just doing immersion and overclocking or just overclocking in general. But if you do it without understanding the trade-offs, you can get yourself in trouble, right? Like we have machines that we've been running for years. And so it's understanding like that cash flow return on invested capital model, the machine can't crap out after 8 months because you've just been overclocking the heck out of it, right? Like you got to make sure this thing is running happily and healthily for years. And we've got a very diligent repair team swapping out hash boards, looking at fans. Like, the kids love working at the facility. So that's the kind of day-to-day part of it too. That also doesn't get often mentioned, but it is worth acknowledging the hard work of our team. Um, you know,
And just to add to that, we gave out RSUs and we haven't given anything out for 18 months in that discipline. But we make sure all those kids that are plugging in those machines and they're running around with their screwdrivers and machinery, they all get a piece of those RSUs. It's not one or two people at the top as you see with many of the miners.
everybody
This
eats.
Everyone gets to wet their beak. Everybody gets to put their oars in the water and pull in the same direction.
Yeah, it's great to get so much insight into the inner workings of Hive, and I definitely agree the owner's care model is the best I've seen in terms of incentivizing everyone in the company to row in the right direction, as you say there, Frank. So another question we wanted to get an update on here, guys, is the HPC strategy. So obviously this is a huge development in terms of the self-mining, effectively doubling your overall hash rate in the next year. However, we also have seen a lot of interest and attention on the HPC side of things, and this is another avenue that Hive has really pioneered. So can we get an update there as well?
It's much, much more complex than a lot of the other peers making press releases about. It is so difficult. It is so interesting. It's this incredible puzzle that you're like a kid building with your Lego set, and you're going to build a skyscraper, the biggest in the world, make sure it doesn't tip over. It is fun, but it is really complex. And so we've seen some of the other releases, what other people have done. We know what machines we have and what our margins are. We're working on something like I would say, like we just announced with Paraguay. We're methodically going through the teething experience, hooking up the H100s, getting the 200s, that whole process that we're working on. But we're hoping to have something that is the aha moment for us. But it's all the process of negotiating and getting something together. But I share with you, it's complex, and anyone that says it's really easy is not telling all the truth.
Yeah, I just to kind of acknowledge what Frank mentioned, we're working on some really huge things, and we're going to come out and talk more about it in the near future. You'll probably need a whole nother episode just for the HPC when we really open the kimono. But it's actually funny, Frank. We just missed a call from NVIDIA, so we got to give them a shout out even the bar after. So we're deeply rooted with that tech community. I mean, Frank and I went down to Silicon Valley a few times, in the last 6 months, just to kind of get deeper immersed in that world, because there's so much happening at the application layer with the large language models. I mean, it's funny because Frank has actually become one of the most avid users of ChatGPT I know. And it's sort of having it's not just about talking about it, but actually utilizing it. But coming back on just the business side of it, look, we hit 7.2 million annualized revenue in this last quarter. A year before we were at 1, so we grew 7x, right? And that's on the financials. So I think that our target for H2 is still 20 million. But what happens is it doesn't scale as linearly as crypto mining because you have end users, you've got people train projects. By the way, we actually hit well over 10 million ARR on our best week. But that big training run, guess what? They were done. And so, it's about constantly finding and incubating, new end users, et cetera. And so we now have more GPUs online than ever, right? Like our target was to get 4,800 of our A series cards plugged in and dialed in. We did that in Montreal and in Stockholm. They're set up, they're dialed in. In addition to that, we have the 96H100. So, when you're scaling a crypto mining business, you got 100, 1,000 S21s. Okay, you plug them in, they're just going to start mining Bitcoin. So I think if you just look at GPU count, we have far more GPUs active and plugged in than any of our peers, right? Like on a no names basis, another crypto miner aspiring AI company has about 800 H100s. The other group has 1,000. They say they might have 2,000 soon. We have almost 5,000 GPUs plugged in, tier 3, doing AI. And so it's about scaling and curating that demand. But
and also each of the machines, I think I need to share with them is that each of the machines, the GPU, so at A40, at 4,000, 5,000, 6,000, you're going to think that you're driving a car. Like, what's the horsepower? And so they rent those machines for 50 cents an hour, for $1 an hour, for $2 an hour, for $4 an hour. Got H100s, $2.50 an hour if it's a short-term, long-term contract. $4 an hour if it's a short-term contract. So it's not just one type of AI. You have to think of who the coders are, what do they need, because they also are trying to be frugal and get the biggest bang of the buck for their renting of these machines. We do know that we're less expensive than the AWSs of the world or the Azures. We know that. And so when Aydin says we do 7 million in revenue, we make 5 in EBITDA. It's if you think we have $2 million. No, most of this stuff is existing machines. We already got our money back mining.
You've already bought those machines for your Ethereum mining. So
yes. Yeah. Now the H100s we bought, well, they're expensive. We did buy them, and we have more to come on and to get those. But we get a higher run rate than those. And we noticed that one of the peers, they say they have lots of 100s. And what Aydin was sharing with you is that we just did the blend and look at their numbers and say, wow, we are still making from these other older GPU chips more money than they have with all this whole suite of 100. So it's just more difficult. It's romantic right now. Everyone's got excitement. Let's go to Venice in the summer. Hey, but it is much more like going to Antarctica. If you think it's easy to build an AI business,
but it feels the landscape. I mean, you guys were probably and the likes of Hut were the two miners well over a year, 18 months ago. We're talking about this business model, and then obviously we've had a number of other miners now come into the space, and then that announcement back in June, beginning of June, with the CoreWeave and the Core Scientific, effectively changed the communication landscape for the miners, really. I mean, the analysts on Wall Street were all looking purely at this and not even the Bitcoin mining because of the predictability in some instances of the revenues coming through. And so the question I'm trying to get to is, we're in 2024 now, and you've got a you're looking at getting to the 20 million by the end of the year of annualized run rate. Talk us through where you see 25, 26 and further on. Where do you see? I mean, you obviously will have bigger growth than that. I mean, where do you see the industry going? And Bitcoin miners playing in that industry over the next, say, 3 years.
I think there's a run for energy, and the value of stable energy has gone up, especially in North America, because of all those universities that want the AI and all the S&P 500 companies that want NVIDIA's machinery. So I think that investment bankers are telling us that when you have access to that energy and you have an existing data center, it's now worth $2 million to $3 million a megawatt. Wow. So that means our assets to New Brunswick are worth a lot more than what's on the balance sheet. And we'll see what happens. But I think that the idea that CoreWeave goes after Core Scientific, then they say no, but then it pops the stock because all of a sudden there's a reset button in the capital markets. And this is how information flows in the capital markets. And so now CoreWeave realizes they can't buy it that cheap. So Core Scientific negotiates terms that if you want this energy on time for your S&P 500 clients, which have come from NVIDIA to you, now you're coming to us, you'll have to pay the capex of $7 million per megawatt to elevate the level of care for a tier 3 facility we have. So we're tier 1 plus, but we're going to go to tier 3. It's going to cost this much. So that all of a sudden reset and this like a takeover resets the relative valuations, etc. In the capital markets, and that's what we see. Bitfarms being going through the hostile with Riot, all of a sudden starts to do a reset on what is the relative valuations. And I think it's most interesting in your hype ratio that you've come out with, because it would suggest that Riot has to pay much more on a relative basis to acquire Bitfarms. If you're paying market cap for Bitcoin mined, therefore you'd have to pay up because Mr. Market is all about price. Price wins in a battle. Price wins. Attacking this board member, this director, this CEO, all that stuff is really comes down to, and I know this is my gold mining business. There's always these dramatic personality fights in the media. They love all that, but really price wins.
This takes me on to a good question, actually, because looking at that height ratio, and I was just looking at your numbers today with your market capitalization, with your enterprise value, and I haven't got your current debt and cash position from your quarter two, which those will be announced soon. But if I take the numbers that I have got, your cost of exahash today for your I'm using 5.5 exahash, is about 68 million per exahash. If you look at the floor, what Riot were offering for Bitfarms, that was over 100 million. And some of these other peer miners, their enterprise value divided by the hash rate, you're into 150 to 200 million. So the question here is, do you guys think you're getting a little bit overlooked from the market in terms of valuation? And we have seen this since that CoreWeave announcement, we have seen the high share price do really well, and it did well today as well. So I mean, the jump in that 7 weeks is probably about 70-80%.
And just to note, you guys, that's renewable exahash as well. So I just want to throw that in for.
Yeah, it's even more valuable. I think the market overvalues future growth announced, not execution. And we are caught up with much tighter. If we say this to you, we've got to find a way to make sure that we arbitrage, zap that gap. And the other reality is the Bitcoin ETF has woken up many technology equity funds that are now looking at the space, and their prospectuses say in the US they can only buy a US home office. And I know this from the gold space. This happened many times. When Barrick used to be head office in Denver, they moved back to Toronto. They got kicked out of the S&P 500. And just think of the sheer size of the selling that took place when that event occurred. So you're seeing that transition, like Hut 8 goes into the Russell 2000 because their home office now is Miami. And so that is all been ignited because of the Bitcoin ETFs. And that's how capital markets work. New information, new rebalancing.
But we had that in about 3 years ago, or just over 3 years ago, when Marathon and Riot got listed on the NASDAQ. The difference for them getting listed as American miners compared, I mean, you guys are the oldest miners out there, publicly listed. You were actually, in terms of 2021, you were the sort of like the Marathon and the Clean Spark today, in terms of what you were doing then.
We were, and we trade 1 billion shares a year. And it's interesting to see that Mr. Market didn't care if you had 86,000 machines sitting on the ground. You just, the fact that you bought them, and so I think that it'll wake up. In my experience in the capital markets, we keep articulating and redundantly, we're green and we're clean, and that's the way we're focused. We're just make sure there's compensation for everyone, make sure everyone's attractively compensated for the value creation, their interests are aligned with the shareholders. You know what happens with these RSUs? It's not like cash, because in a year from now, they could be double, triple, then all the shareholders win, or they could be half. Well, they take the same pain as the shareholders now. So that mechanism aligns their interest. And they call that at Harvard. Every year I go to Harvard for a week with a group of CEOs, and it is nonlinear versus linear compensation, where you create a loyalty and a culture with 9 time zones, different languages, different cultures. And so how do we do that with the lowest G&A per Bitcoin mine? That's what I'm most proud of, when I take a look at the value proposition. But I think we'll come back. We'll come back and be recognized for our contribution. I think the game changer was the announcement today in the Bitcoin arena. I think for the HPC is stay tuned. We can find something that is really significant in that space. But we don't want to just have little incrementals and storytelling. Like buying a bunch of H100s is very risky if you don't have the client.
Yeah.
In Bitcoin, you don't need a client. You just need a market to sell your Bitcoin into. So it's a different dynamic.
I would also add to that, just getting back to this thesis of execution, right? Like, it seems that there's a benefit of the doubt multiple that's been given to some of our peers, even though whether it was back in 2021 or even as recently with some of the other, up and coming aspiring crypto miners who want to pivot to AI. So a couple points. So first of all, Hut 8 had the TerraGo data centers. Those are telecom data centers, right? Which was an interesting purchase back then. I guess the street didn't really reward it. But when you're asking us about what's in the next 1 or 2 years, the density and architecture of AI data centers is much higher than telecom data centers. So I'm talking about 40 kilowatts a rack, 80 kilowatts a rack. If you get NVIDIA's flagship product, it's 120 kilowatts a rack. So this is immense power density. So, we're coming from an era when, it was less than 20 kilowatts a rack. So you have to be building your data center. So when we look at our existing infrastructure, we go, if we wanted to turn this into tier 3, like Frank's talking about, we're not just looking about today, how do we future-proof this? And so then that becomes a very comprehensive and exhaustive.
Just like the Blackwells, explain like the complexity of building a data center. Okay, let's go to tier 3. We've got a competitive advantage. We got 80 megawatts here. We got 30 there. It's not that easy. As Aydin is trying to share with you.
Well, obviously, you have a plan. There's a plan now, like we say, with power consumers that take 18 months lead time to arrive for these big sites. I'm assuming that because it takes so long to get these data centers fit out as a tier 3 data center, you're going to have to plan well ahead. That's why I was saying, give the landscape for the next few years, because I don't think you stop. Well, I'd like to think you're not stopping at 20 million per annum in HPC.
No, the target's still 100 million for next year, right? Like,
And that's what I was alluding to from your actual
yeah,
presentation.
the H2 target is 20 million. Yeah, Frank, go ahead.
No, I think that the complexity is really important to appreciate, like, but it's fun in that space. And Aydin has spent so much time recently on engineers, our construction engineers, to reconfigure or take 20 megawatts. Well, if we reconfigure that, what the market's saying is faster and easier for us to take 80 megawatts, allocate 20 for HPC. That is extremely valuable because you don't have to wait 3 years to get permitting. What's the net present value of 3-year waiting? So if you have all these boycotts in Canada, Canada's not just each province against Bitcoin mining, it's about HPC period. So and the same thing happened in Sweden. Whoa, we've got this energy. And so what's happening is that you're seeing, and Fred Thiel covered it really well, saying that they're going to, you could see some of the big hyperscalers go against Bitcoin miners because they want to get our energy. They want to get Core Scientific's energy because they already have it in place, and they would have to wait 3 years to start from scratch. Whereas now they can do it in 9 months if they have the equipment. And so what we have found is a lot more work. Aydin is steeped in all the engineers from our service providers at NVIDIA, that how do you build for a Blackwell?
That's the thing. Like, when you look back at crypto mining in 2017, 2018, and you want to build a 2 or a 5 or 10 megawatt site, and I'm talking, 7, 8 years ago, and that was big. Conventional electricians would be like, you want how much power where? And like, this is crazy. And so like it was fringe, right? And so then, people get used to it and they figure it out. What we're trying to share with you is that, conventional designers, when they see the specs of the next generation Blackwell power density, they're shocked. And they're like, and we have to be like, no, I'm telling you, this is what I need. Like, I don't need your opinion based on the last 30 years of you doing this, because the future is over here. So we can't build this. We need to build this. And if you can't figure it out, I'm going to go find somebody else that can, right? That's what you wrestle with when you're innovating, right? So but it's part of the game. It's part of the hustle. So I think that, I wish we got a benefit of the doubt multiple, because we've consistently executed so many times, pivoting the Ethereum merge, building our own buzz miner, mining profitably throughout every single quarter of the last 3 years, lowest GNA per Bitcoin mine, amongst best hash rate utilization. But you did kind of ask about being undervalued, etc. I think we're finally starting to get a little bit of credit here. Our stock is up almost 50% since our earnings came out, which is amazing. And I do want to acknowledge that B. Riley put out a fantastic research report on us last week. So I think that really being a TSXV company from the get-go and listing at NASDAQ later, we had coverage from Stifel and Canaccord, which is great. But I think the more that we spread our wings into the US capital markets ecosystem, we'll just start to get that awareness. So HIVE will become more of a household name. And I think that could be a real catalyst to this multiple that we're seeing. And I mean, I don't know, maybe San Antonio would be a good head office for HIVE. Who knows? Currently it's Vancouver. But you
have to run it out of Vancouver, but you just have some of your technical compliance stuff in there. But it's just interesting as we go through this, and you've got to always be humble, because you were the number one child in the world and everyone loved you and you had 1 billion shares of trading, and you quickly, it's so competitive and innovative, you can fall behind. And so you have to be so grateful when you've got the wind at your sail, but be very humble.
Yeah, it's a great way to close out here, you guys. And the statement you made, Frank, Hive, clean, you're green, and you're mean with this new Paraguay acquisition and 100 megawatt facility. So I'll hand it back to you, Anthony. If we've got any more closing questions, then we can give it to Hive, and really appreciate the time today, you guys.
Got a couple of quick questions and really quick answers, if you could. I mean, you guys have got a really good hodl now, well over 2,500 Bitcoin. You were bringing the revenues when the Ethereum mining was going on. You were the lead miner at that point in time. Is there any thought process of converting any of your Bitcoin to Ethereum with what's about to happen tomorrow?
No.
And the ability to stake it and to stake Ethereum.
No, we're proof of work, and we're working all the time. That's right. We're workers. That's just proof of stake. That's Excel on steroids. That's all.
But one of your peer miners did convert about nearly 600 Bitcoin.
But isn't that they do Ethereum staking?
They do Ethereum staking, so it brings another. I'm just thinking, I mean, you always have a sort of an edge when it comes to looking at the next.
It sounds like a great idea, but it's like I was criticized why we didn't lend our Bitcoin out to get a high yield on them, and Celsius came and knocked on the door, and we would have lost our Bitcoin.
Yeah.
We're like I said earlier, we're conservative.
Yeah.
I'm sorry, investors, if you don't like it, that's okay. But we are conservative, thoughtful of how we're building the business. And we believe our long-term vision, Anthony, is to be recognized as a data center, a unique data center operator, green and clean, and they trade at 20 times EBITDA. And so if you're going to be trading 20 to 25 times EBITDA because you're green, you get that higher multiple, that means that we should be trading closer to 700, 800 million today on that valuation.
That takes me to my next question, and it's a very quick one. Has the phone been ringing with regards to possible companies coming in to acquire HIVE? Because if they're going into the likes of Bitfarms, I mean, are they not looking at other miners that sort of like that position with a reasonable size of hash rate there, and your valuation? We've just spent 5 minutes articulating how your valuation compares to peer miners.
No, there's no one's been knocking on the door, and which is fine with us because we're too busy building the business, creating value for the shareholders, and so I think that we have a pretty strong, loyal group of shareholders, also that believe in that vision, and it's just what it is. Like I said, you've got to be. We'll rise to the top again. We'll be there, but you have to be humble because you can quickly get outsmarted by something, how capital markets change and morph in those metrics. But I do think that some of these valuations, either they come down that are in la la land, or we get re-rated up. So I would bet that math suggests Bitcoin's rising and we hodl, the re-rating goes up. It's not that they're going to come down; it's that we're going to go up.
You're ticking the Bitcoin hodl box, and you're also ticking the HPC box, which seems to be getting the highlight at the moment, really. So in two areas, you're doing positive.
Well, I think our HPC strategy will replace the Ethereum, and that means our goal is to be getting it up to 100 million in revenue, and we'll throw off $50 million in EBITDA with that. With our new ambitions in Paraguay, we did 37, so that would mean that we would be back up to we would probably about 50 million also, wouldn't it? Aydin, about 60 million in EBITDA when that's fully going.
That's right. Yeah, exactly. But I think that
so collectively, our goal is to get $100 million in EBITDA, and that's excluding mark to market. That is from our cash flow.
Yeah. When you look at the hash price of having 12x the hash and us getting where we're at today, and doubling our hash rate because, okay, we've been very conservative, as Frank says, scaling with intention, upgrading our fleet. This is our big boom here. I've been doing interviews in the past few weeks, and what I had to say is like, we understand nobody wants to know about going from 5 to 6 exahash. We're talking about going from 5 to 10 to 15, right? And as Frank alluded to, there's maybe 250 megawatts. We're starting with 100 megawatts slug. That gets us to 12 megawatts. When you look at what that does for our EBITDA and our earning, it makes us even more of an attractive value proposition, right? And so I think that to answer your question, I think that really, Hive was over $1 billion market cap in 2021, right? So I think that we're a bargain. We're making, we have more installed capacity now. We've got, a really exciting growth trajectory ahead, and really being strongly positioned with HPC. I think, a little bit more execution and some exciting press release on the HPC will make people really open their eyes, and then that sort of put things into focus. But just from where it stands right now, where we're producing, I still think that there's a lot of upside in the stock.
Yeah, I would definitely tend to agree. We've pitched Hive as the value play in the sector on quite a number of podcasts. It's great to see this big announcement here today, you guys. You stick to your brand. It's conservative in terms of the operations of the business, and you always deliver on your promises. So again, the mean green clean team from Hive. We're going to be seeing you guys in Nashville this week. It's going to be a great event. Both pioneers in the industry. Really appreciate the time today. You guys, if you're still watching, smash the like button. Feel free to subscribe to the channel. We just hit our goal of 45,000 subscribers, you guys. And leave a comment in the section below. Let us know what you think about Hive's big announcement today. Aydin, Frank, I'll throw it back to you for closing thoughts. Thanks so much for the time today. We really appreciate it.
I got an interesting stat for you, actually. So we did about 100 million revenue last year, right? We just filed 114 million. Okay. So at the same Bitcoin mining economics, right? If we went from 5.5 exahash to 12, we'd be at 220 million revenue. Our peers are trading at an average of 6x. This is actually in our earnings webcast, 6x revenue. Okay. We were trading at 1.4. So you do some simple math, 6 times 220 million, that would put us at a potential 1.3 billion market cap just on the Bitcoin mining business alone.
Without HPC, yeah.
US. So that's just
from your lips to God's ears and that moon, to the moon, Aydin.
And that's no HPC and no HODL, right?
Here's an interesting fact. The share price has gone up 75% since I wrote my article.
Yeah, there you go, Anthony.
I'm taking all the credit, by the way, guys. All the credit.
Frank, bring us home here. What's the closing thought from your wisdom over there?
Just be humble. Thank God we just are in this business, and we're part of a great global change and the great digital transformation. It's a blessing to be able to be part of the great digital transformation.
It certainly is, and history is going to be made this week, you guys, in Nashville. We'll see you there. Appreciate everyone tuning in tonight. Thanks so much for your time. We'll see you tomorrow.